Good morning and welcome to the Shenkman Private Client Group Accountant Attorney Fall webinar series. This program is entitled The State-Based Right of Publicity, an overview of estate tax and valuation issues. For those who don't know me, my name is Jonathan Shenkman. I'm a financial advisor, portfolio manager, and an accredited investment fiduciary at Oppenheimer based in New York City. The goal of all my programs is to bring professionals together to help them better serve their clients. This is done by educating attendees on the latest topics in wealth planning and by encouraging collaboration between a client's attorney, CPA, and financial advisor where appropriate. My practices focus on working with high net worth families, businesses, and not-for-profits. I manage individual investment portfolios, trust accounts, corporate retirement plans, and endowments to help my clients achieve their financial goals. In addition to the 20 to 25 events I run every year, I also do a fair amount of writing on the topics of investing and financial planning. You could read my work in Barron's, CNBC, Forbes, Kiplinger, The Wall Street Journal, the CPA Journal, Trust and Estates Magazine, and many other periodicals. After the program, I'll send out a link to all the publications where I publish my work. Today, we're privileged to hear from Ladidas Lumpkins, partner in charge of private wealth services at New York-based accounting firm Prager Metis. Ladidas provides strategic tax planning, compliance, and consulting to high net worth families and closely held businesses. She specializes in the U.S. taxation of individuals and trusts in its complex multinational family groups. She also provides clients on domestic and cross-border income, gift tax, and estate tax matters. Ladidas has extensive teaching experience covering numerous tax topics, including as visiting lecturer at the Experimental College at Tufts University. Today, Ladidas will be speaking on the state-based right of publicity, an overview of estate tax and valuation issues. And with that introduction, I'll turn the program over to Ladidas.
Thank you, Jonathan, and good morning, everyone. I'm going to start this webinar in an unconventional way. I'm going to begin with my last slide, and then I'm going to answer the questions that were posed in the description for this webinar. And those questions were, what is the right of publicity? Is the right of publicity descendible? What state law applies and how is it valued? Bonus question, where do we go from here? My hope is over the next 30 minutes to bridge between the answers to these questions and what you see on your screen. And the question posed here is, which person is real? And I want you to take a look, because 8 of those faces that you see, I generated from a website called thispersondoesnotexist.com. One person is real, the other 8 are not. So we're going to end with this slide, but I want you to take a look, choose who you think is the real person, and at the end of this presentation, I'll reveal who the real person is. One other housekeeping matter is this presentation is 60 slides long. We will not have time to address every single slide, so I will advance past details that we don't have to go into this morning, but you have them in your materials that Jonathan has sent out. So with that, let's talk about what is the right of publicity. And as stated, I'm going to answer these questions right at the top. What is the right? It is the right to control the commercial use of an individual's name, image, likeness, or persona. The right is descendible, and it depends on state law. What state law applies? Well, when we're talking about the post-mortem right of publicity, generally, the personality's domicile at the time of death is going to control. How is it valued? Fair market value at the date of death. And where do we go from here? I've already given a sneak peek of the question of whether the right of publicity is keeping pace with technology. We'll also consider the expansion of the right among states and look at the NCAA in particular and their announcement this summer that student athletes will be able to use their name, image, and likeness. They will be able to exploit their name, image, and likeness effective July 2021. We'll also take a look at the unique drafting that the attorneys for Robin Williams accomplished. Robin Williams died in 2014. And we'll consider whether you can use the estate plan to restrict a personality's right of publicity, and do those limitations impact the value. But before we get there, we need to look at the right of publicity in its historical context, which lies in the right of privacy. And I'm referencing here an article that was written written in 1890. It's a Harvard Law Review article, and some have called it one of the most influential articles in the history of American law. And others have called it the most influential article to have ever been written impacting American jurisprudence. And the reason the article is important is the author set out to define this right of privacy. And it wasn't purely academic, their motivations. It was in response to emergence of this new style of journalism that was based on sensationalism and lurid reporting, coupled with this new photographic technology that enabled anyone to capture another's image. Prior to a portable camera, someone had to sit and pose for a photograph. But with this new technology, anyone could take anyone's picture. And this article describes the right of privacy as the right to be left alone. So to the extent that your personal thoughts and emotions and feelings are expressed in some tangible medium and it's published without your permission, that is an infringement upon your right to be left alone. So the right was further developed by William Prager, and he identified 4 torts of invasion of privacy: intrusion on seclusion, public disclosure of private or embarrassing facts, false light publicity, and misappropriation of personality. Prager's torts dealt with the right of privacy as a personal right, but in the Halen case in 1953, that court established a right that is separate and distinct from the right of privacy, which is the right of publicity. And this right, which derives from state law, is that a person has a right in the publicity value of their image. You can read on your own New York civil rights laws applicable to the right of privacy, and we will come back to New York laws when we discuss what's next and discuss New York's amendment to this section in November 2020. You can also read the details of the Halen case, particularly if you're a baseball fan. It had to do with Topps chewing gum and an exclusive contract that they impeded upon, exclusive contracts that Halen had with more than 100 ball players, in Topps chewing gum went around those contracts and signed contracts with these ball players that were already under contract. So is the right descendible? Prior to the Andrews case, the Andrews case is very important because prior to this decision, conventional wisdom amongst the state tax practitioners was that a right of publicity was not includable in a decedent's gross estate. How did they get there? The right of publicity is derived from the personal right of privacy, and the personal rights die with you. And this case established that a descendible right of publicity should be included in a decedent's gross estate for federal estate tax purposes, and that property right arises from state law. The court agreed with the IRS that Andrews was, at the time that Andrews died, she was domiciled in Virginia. Virginia law has a descendible right of publicity. That right is a property right and therefore must be included in the calculation of the gross estate. So let's talk a little bit about the facts because they will become important when we go and talk about the Michael Jackson case. So B.C. Andrews, let me pull up her picture again because some of you may remember this book and this writer. But she was a prolific writer in the 70s and 80s in the children in jeopardy genre. And after her death in 1986 in Virginia, pocketbooks continued to publish books under her name. The estate did not list Andrews' name among its assets on its federal return. The IRS issued a notice of deficiency, which the estate paid and then filed a claim for refund. The estate first argued that Andrews' name and likeness should not be valued for estate tax purposes because they were not assets of the estate. Eventually, the estate abandoned that argument and argued that Andrews' name and likeness, although assets of the estate, had no measurable value. Again, the court agreed with the IRS that under Virginia law, and here you go, a person does have a right of publicity in their name, portrait, or picture, you can see highlighted there, and that it lasts for 20 years. And again, we'll come back to the Andrews case when we'll talk about valuation in the Michael Jackson case as well. Okay, so what state law applies? There are some options, and it could be the personality's domicile, it could be the defendant's domicile. If you've got a plaintiff who is stepping into the shoes of a personality, it could be their domicile or the law where the infringement occurred. But when we're talking about the postmortem right of publicity, typically, and the majority of courts apply the law of where the person was domiciled at the time of death. But there are additional options. It could be, if it's during life, some courts will apply the law of the state where the most significant relationship with the state of the laws of the state with the most significant relationship with the controversy. And there are also some state laws that provide a separate choice of law rule within their private right of publicity framework. For example, Indiana, I believe, has a choice of law. And the next couple of slides, I just want to give you a couple of resources for you to investigate further various states and their statutes and the status of the right of publicity laws. One is rightofpublicity.com, and the other is rightofpublicityroadmap.com, but it's a good source of information. How do you value this right of publicity? And this descendible property right that the Andrews case discussed. And the Andrews case provided the only reference point for the tax court in the Jackson case in figuring out how to value a postmortem right of publicity. In the Jackson opinion, the court stated that the Andrews case was the only case they found that was on point. So let's take a look at the 5 key tracks that the Andrews case laid. One is that the gross estate of the decedent shall be determined by including the value at the time of death of all property, real or personal, intangible or intangible, that's us, wherever situated, and that's under 2031. The regulations under 21 provide that the value to be assigned is fair market value at the time of the decedent's death. Fair market value is the price at which the property would change hands between a willing buyer and willing seller, neither being under any compulsion to buy or sell and both having reasonable knowledge of the relevant facts. Now, what are relevant facts? Those are facts that the hypothetical willing buyer and seller could reasonably have expected to know at the time. It's Kenosha. But subsequent events are not considered in fixing fair market value, except to the extent that they were reasonably foreseeable at the date of valuation. The last point was a critical question for the Jackson estate. For example, was it reasonably foreseeable that his estate would earn more than $1 billion since his death? And the court in the Jackson case said no, and really chastised the commissioner's expert for including unforeseeable income in streams and including unforeseeable income streams in the calculation of Michael Jackson's right of publicity. Before we transition to the Michael Jackson case, I want you to take a look at the actual calculation of the value of B.C. Andrews' postmortem right of publicity. B.C. Andrews' case essentially used the market value approach. Shortly after Andrews' death, the executor and the publisher agreed to a 2-book deal using a ghostwriter for $3 million. And establishing the value, the court determined that what was reasonably foreseeable between the parties was that one book would be written, but the second was speculative. So their starting point was the value of the advancement for the first book. And that was $1.55 million. And then they subtracted expenses, which were $500,000, coming up with a net of just over $1 million. And then they used a discount factor of 33% to come up with a fair market value of $703,500. The Michael Jackson case followed something similar. Of course, the numbers were bigger and more complex, but this is the blueprint. And I wanted to show you, just for you to have conceptually how these really complex issues can be distilled. So I already talked about the market approach, but when you're talking about how to value this right of publicity, you want to look to basic valuation methodologies for intangibles. And there's the income approach, market, cost. When dealing with intellectual property rights, typically a hybrid of income and market approach is used. And the market price, as we saw in B.C. Andrews, can be established by a sale of the asset close to the time of death. So let's talk a little bit about the Michael Jackson case and that decision that came down in May of 2021. And here we have a comparison between the IRS and the estate values of various intellectual property rights. And since today we're talking about the right of publicity, I want to focus your attention on the first line. And what we have, or the first row, I should say, what we have is the value per the IRS. This is before the trial, pre-trial and at trial, the value per Jackson's estate, and then the difference. Ultimately, the court agreed with the estate's valuation with some adjustments and placed the value of Jackson's image and likeness at about $4 million. But you can see the massive discrepancies that existed. You can read some more detail about some of the standards in the case here. So in reviewing the competing valuation of Jackson's right of publicity, the court asked and answered several fundamental questions, including how will the court determine whether the asset should be valued as a block or individually? So here you have a good compliance check mark. They're going to look to the Form 706 in how the filer reported the assets. So it's important to separate out your different items of intellectual property. And then they ask, should Jackson's image and likeness, as defined under California law, because again, this right comes from state law, should it be included in the gross estate? And the court said, yes, the gross estate includes the value at the time of death of all property, whether tangible or intangible. Does inclusion of the gross estate compel heirs to exploit the image and likeness of the decedent, whether or not that was their wish? They asked the question, but they answered a different question. And they said under California law, Jackson's image and likeness is an intangible right that is transferable at death. Therefore, it must be included in the calculation of his gross estate. They raised a good question, answered a different question, but the question remains. Whether the cases address directly the taxability of image and likeness. As I've stated, the court in Jackson only found one, estate of Andrews, which we looked at. And how do you value the right? The value of the right is its fair market value. And it's generally its value and its highest and best use on the valuation date. California law, for you to read on your own. One of the most important takeaways from the Jackson case is that credibility matters. Credibility of your experts matters. The court was unrestrained in expressing its disdain for the commissioner's expert. And what the court said is that we reject Anson, and that's the commissioner's valuation expert, his analysis as fantasy. That's a quote. And this expert did a lot of things wrong. They valued the wrong asset. They included unforeseeable events, and the court stated that 4 of the 5 revenue streams that Anson included were not foreseeable at the time of Jackson's death. But they also said the last problem is with the math, that Anson failed to include any expenses associated with the management of Jackson's image and likeness and future cash flows. Think about this for a minute. Recall the Andrews case, which only had 3 numbers: the cash received, the expenses, and the discount. And the government's expert did not include a most basic and fundamental adjustment. And the experts also failed to take a more holistic approach to coming up with their discount rate. The court found the estate experts to be closer to reality, although it did not agree with it in all respects. If I had to summarize what they appreciated most, is that the approach was very measured and considerate and thoughtful, and considered not only the harm to his reputation by the allegations of abuse that surrounded him, but they also looked at his career over a 30-year span to come up with a more holistic approach to coming up with a valuation. And you can read more about some of the items that the court really appreciated that the estate's experts did. Okay, so let's talk about, in the last 10 minutes we have together, we're doing good, is some of the estate planning considerations that practitioners should address. So the first is domicile, and that should be apparent. The Jackson case instructs that the decedent's domicile controls the post-mortem right of publicity. So what if the state does not have a post-mortem right of publicity? There is likely no relief. And we learn that kind of the hard way in the Marilyn Monroe case. At the time of her death, Marilyn Monroe was domiciled in New York, not California, although she died in California. And since New York did not have a post-mortem right of publicity until last year, she could not assume a claim for protection. The irony here, and maybe it's cautionary, is that her estate claimed she was a New York resident to avoid paying California inheritance taxes. So you win the battle, lose the war. Let's also think about the situation that if you have a state that has no post-mortem right of publicity, is the right still included in the calculation of the gross estate? Probably not, but there is some other right that lives on, and maybe it's trademark. And we get that impression from 2033 that again says the value of the gross estate shall include the value of all property at the time of the decedent's death. And to the extent that there was no right of publicity because of the state didn't recognize it, it would appear that that right would not be includable in the calculation of the gross estate. But again, there's probably something else that the IRS will latch onto. So quickly about Prince, was domiciled in Minnesota at the time of his death. In April of 2016, Minnesota has no statute or developed common law right of publicity. And in 2016, the Minnesota legislature, very close after the time he died, proposed the Prince Act, Personal Rights and Names Can Endure, which provided a 50-year right of publicity and was retroactive back to those who died before enactment. That last provision caused the family some pause. At first, they were supportive of this bill, but then withdrew their support because of concerns around what estate tax impact this law could have on Prince's estate, although arguably there would be no impact because similar to the Marilyn Monroe facts, there was no descendible right of publicity in Minnesota at the time of Prince's death. You can talk about, you can read about some other estate planning considerations. If you have an illiquid estate, you might want to consider life insurance or selling it prior to death. And the Aretha Franklin case could potentially show us some of those issues. Her estate has been reported to be somewhere between 18 and 80 million, but it also owed $8 million in unpaid income tax. Michigan does have a common law right of publicity, and federal courts have recognized a descendible right of publicity under Michigan law, but query whether there's liquidity in the estate to pay the estate tax on a right of publicity if it has a huge value, considering some of the other debts that are associated with the estate. Should you get a pre-death valuation? Probably not, because then you have evidence of a value which might be higher than what the value may be at death. Okay, so let's talk about what's next, and we're going to make it to that last slide. So I hope you remember that face that you think is the real person. So I want to talk about what happened in the summer with the NCAA. And the fact that in June 2021, they announced that as of July 2021, college athletes can benefit from their name, image, and likeness. So what we're seeing here in terms of what's next is the expansion of the right of publicity. The policy is temporary and will remain in place until there is a federal law. Don't hold your breath, there isn't one. Or NCAA rules are adopted. So this was a game changer, but I want you to look at one or maybe, let's see, 3 points above. And that says from the bottom, between 2019 and 2021, 20 states had already passed NIL, name, image, likeness laws that are currently effective or will be over the next few years, giving student athletes this right. And California was first with their Fair Pay to Play Act in September 2021. You can read more about the various cases on your own. Another planning opportunity that we want to think about in terms of what's next is, should restrictions on a personality's right of publicity be considered in valuing a decedent's right of publicity for estate tax purposes? It's not clear, but what is clear is that there is some precedent to suggest that good faith restrictions that reduce the estate's value prior to distribution to the beneficiaries should be taken into account in valuing the estate. And we learned that from the Amundsen case, AHMANSON from 1981, which had to do with transformations to property, namely stock, that occurred prior to distributions to the beneficiaries. In dictum, the court stated that the estate tax is a right on the privilege of passing on property, not a tax on the privilege of receiving property. And now I'm quoting, thus, if a public figure orders his executor to shred and burn his papers and then turn the ashes over to a newspaper, the value to be counted should be the value of the ashes rather than the papers. So it should follow that what Robin Williams did should work. And what the estate planners did, Robin Williams, he died in August of 2014. He left his right of publicity to charity, but the charity may not exploit that right for 25 years, and it should work. According to the trust agreement, the restrictions take effect at death. Therefore, the value that is transferred to his charity should necessarily be reduced to reflect the limitations placed on the right of publicity. We already talked about New York and their right of privacy, publicity laws. They were one of the first, actually, they have the longest standing statute protecting a right of privacy from 1903. But they added in 2020 50F, which clarified or mandates now that this right is freely transferable or descendible for 40 years. And you see that bolded, well, maybe you don't see it, but that's what they established. And to give it some context, California's right lasts for 70 years. But they also added a unique provision that protects individuals from the non-consensual use of their digitized personas in sexually explicit content. What are we talking about? Deepfakes. The word comes from deep learning and fake, and it uses artificial intelligence to replace one's likeness. In New York now, has a cause of action protecting depicted individuals from the misuse of their digitized personas in sexually explicit material. What's interesting to me about this provision is that we see lawmakers trying to keep up with the digitization of personality. It's an implicit recognition that personhood is being expanded in new ways. And they're using privacy rights, which are personal rights connected to a human, to address those concerns. Okay, what's next? End of humanity? Probably a stretch, but I want to point out that there's more splintering of personality that is occurring. And one example is the show called Alter Ego, which premiered this past September, where you have real people who create their own digital personas and they use that persona to entertain an audience. And at least one writer really doesn't like the show. And he says, without hyperbole, watching Alter Ego feels like watching the end of humanity. Maybe it goes too far, but it does raise interesting questions of how these rights, which are inextricably tied to personal rights, will evolve, and the idea of person changes. For some of the contestants, they have reasons for not wanting to show their bodies, and some describe their avatars as their true selves. And before we dismiss the idea that these avatars could be protected under a privacy law, right of privacy, consider Indiana's statutory right of publicity, which extends to a personality and includes protection for things like their distinctive appearance, their gestures and mannerisms. I want to thank you all for your time this morning. Here's, and also go back to that first slide, which is my last slide. So what's next? Which person is real? The last iteration, or this is another iteration of splintering of personality from personhood. You can imagine a scenario, and maybe it already exists, where you have a completely digitally constructed person appearing in media. So some of you may remember the movie Weird Science from 1985, where two guys used a computer program to create a woman, except in that story, they used a real actress. But today, do you have to use a real actress? And what happens when your computer generated person looks like a real person? Who owns the right to your face? Which person is real? Here is my contact information. Again, thank you, Jonathan. Thank you all for spending time with me this morning, and I will not keep you in suspense anymore. That is me, and that is my mom. So if you chose that lovely woman on the far right corner, then you chose the real person.
Thank you so much, Ladidas. That was great. If anyone has any specific questions, new business opportunities, or any issues they'd like to discuss, please feel free to reach out directly to Ladidas or myself where appropriate. I'll be sure to include her contact information in the follow-up email to this program. The slides were already sent out. They'll be sent out again tomorrow morning. Just check the follow-up email and you can click on the link and you'll have this deck of slides. As I mentioned at the onset, the goal of these programs is to stay up to date on timely wealth management related topics and to collaborate where appropriate. I think we can all agree that the clients who are best prepared are the ones who are served by a team of knowledgeable advisors. 2 more quick items before I let you go. First, my next program will be on December 2nd and is entitled International Tax Planning in a Post-Pandemic World, featuring Leo Parmigiani and Christopher Migliaccio from accounting firm PKF O'Connor Davies based in New York. Second, please take 30 seconds to fill out my survey at the end of this program. It helps me improve my webinars and provide timely and interesting content to attendees. I thank you in advance for that. And with that, this concludes today's session. Please stay safe and healthy and have a wonderful day, everybody.